Good afternoon, ladies and gentlemen. We're going to be talking about AMC stock today. First earnings we're talking about for the week. It's exciting stuff. Why AMC? Well, you know what? This is a stock that has been on an absolute Homer-esque odyssey. I mean, this is a true odyssey here. Over just year to date, you can look at this stock where we reached points where it was up 890%. We're talking about $20 a share here. Then dipped, and now has seen some recovery since that dip of about another 78% even recovery. What's going on here? On the year, stock's still up 390%. Seems like a bonkers thing. So let's look at these earnings and see what's going on. After hours up right around 6.5. Kind of being a little volatile. What a shocker. You see volatility today when it was down 6% today alone. So let's look at these earnings. I'm not expecting much. I can't lie to you, but we'll see. Oh my goodness. Quarter 4 non-GAAP EPS of negative $3.15, misses by 30 cents, and a GAAP EPS of negative $6.21, misses by $2.89. I mean, ladies and gentlemen, do I need to continue after this? Oh my goodness. Revenue of $162 million, down 88% year over year. It is a beat by $20 million though, down 89%. Oh my gosh. That is wild. That is wild to see a business so decimated. Good grief. Did want to put that in perspective. Obviously, we'll see what the full year came in at, but just put it into perspective. Stock is trading a market cap of $3.3 billion at this point, but we'll see. Adjusted EBITDA came in at negative, and this is adjusted, by the way, negative $327 million versus last year's $269.1 million. Sweet. And cash after December 31st came in at $308 million. So by that metric, they are out of cash. Uh-oh. Let's hope for the best, okay? Let's look at a little bit more detail here. Obviously, total receipts fell 89%. We saw that. Attendance dropped year over year 91.3% and 92.3% in the U.S. markets. Good grief, that's rough. On slightly less than 1/3 of screens operating. That's even more rough. I mean, I guess you can see the larger cities that have these screens that obviously people aren't able to attend. If 1/3 are available, yet you declined by more than 1 or 9/10, your revenue is 1/10 of what it was, but you have 1/3 of the screens. Clearly, there's a discrepancy there. So I'm curious if that's just people not wanting to get out at all, which it probably is part of it, or if it's just that the ones that are closed, the 2/3 that are closed, are not that productive of ones. We'll see what that looks like. Also, a lack of movies, new movies releasing in theater, doesn't help them by any means. A net loss in GAAP terms swelled to $946 million from a year ago loss of $13 million. This company lost $1 billion while bringing in a revenue of $160. That is what I call an ugly quarter. I don't think we can deny that. Let's be honest with ourselves here. Did I mention the stock was up 300% year over year? On the year. Who said that? The company took $466 million non-cash impairment charges tied to long-lived assets. So again, they'll be selling some stuff. In critical liquidity update, obviously, as of December 1st, they had $308 million in cash. I mean, I don't know. So clearly, they are completely out of money. I mean, there's no doubt. So I'm curious. Who knows? Since March of 2020, thanks for the CEO of clearing it up, they raised approximately $2.2 billion of gross cash. So again, This is going to be a massive addition to the debt. So we're going to look at this. We're going to be looking here at the balance sheet and obviously take a look at that. As of March 5th, the company's operating about 527 of its 589 domestic locations. So we'll see what that means, obviously, for the revenue line coming up. But it still is an issue where international, obviously, huge issue, 78 out of 356. But the issue becomes where we don't have that many shows, or movies, rather, that are going to be released on, straight to theater. Most people are, with new streaming services, streaming directly, and they're not doing much theater releases. So theatrical releases are at a very low. They're at a big low. So even though this quarter they've already seen improvement with more theaters open, less movies, I don't know what you're going to see with this business. I mean, it's still going to be a 50% decline year over year regardless, I could assume. But we will see. So let's look at the press release and see what we can do. So overall, fourth quarter summary results here. Nothing super crazy, but again, they talk about the theaters coming back up, and how obviously the year has been deleterious to them. We see obviously the 88% drop in revenue. For the full year, a 77% drop in revenue. Full year net loss came in at $4.5 billion, which is $4.4 billion more than the year prior. Oh, gosh. That's crazy. I don't know. I don't know if anyone else thinks that's crazy, but yeah. Of all stocks to absolutely skyrocket this year, you almost wonder why it's this one. Obviously, there are reasons that ties to a short squeeze by many mutual funds and a group of trolls online trying to get to them, and they did a good job of it. Let's be clear here, but still, just wild that this is one of the ones that you see getting the favoritism there. Operating metrics, obviously. For the full year, down 79% in attendance. U.S. markets down 81.4, international down 72.9. In average screens, down 52%. And again, that's obviously due to closures, but it's also due to a lack of movies being released. So you need to mention that as well. They gives notes about this balance sheet, but again, I'd rather just look at it. Theater reopenings, obviously we saw that. I'd rather just look at the balance sheet personally. So, you can tell me a thing about that, but I need to just see it, baby. Please, 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 please. Why you gotta be so cryptic here and not show me the balance sheet? Oh, you AMC, you stinker. You're a stinker, aren't you? It really just wants to hide from me. And the thing is, I don't accept that. I don't accept hiding, no matter what you do to me. Not at all. Let's see. Well, if they're not going to do that for me, you know what I'm going to do? We'll read some of these goodies here. If we can. I would prefer personally to not do this, but we'll see. If you give me just one moment here, and you gotta bear with me. You gotta bear with me. This is a thing that I thought I was good on, and I do greatly apologize for such a thing. I apologize for such a thing. I don't mean to. 10Q. You don't have a 10Q for me? They're playing games. That's about what I could do. That's about what I could tell you. Latest 8K. What they can do here is just be nice to me. PDF, baby. Don't think we're gonna get lucky here, unfortunately, but we may not. we're not going to get lucky. It's unfortunate these days that this is the games they want to play with me. And they can play these games all they want. But what I'm going to do here then, as a result, is we'll look at some of these highlights, obviously. It's the right thing to do for you. They really just soured me. They soured my experience here during the first quarter. Drew in approximately $325 million under the existence of revolving credit facilities. Again, this is going to be a thing where we see massive debt here. In July, successfully completed debt exchange, no doubt about it. This every freaking month here, you can see that they're just releasing senior notes or doing debt exchanges. It's rough out here. Obviously, rough out here. So, cash as of December 31st, as we saw, not good. Overall, I can guarantee you, once they release these results, which I hate to say they haven't released the freaking 10Q yet, but they haven't. Once I'm able to see this, obviously we'll take a look at it, no doubt. But I can assure you this balance sheet has been completely destroyed. We're going to be talking about significant long-term debt, significant stockholder deficit, no doubt. There's definitely no equity in this company right now. And it just makes you think. Again, we saw for the full year, in terms of revenue, they put up $1.2 billion. And all things considered, the stock is trading at a market cap of $3.3 billion. It's not the most ridiculous valuation out there, all things considered, despite the stock being up by a significant margin. You just wonder how the stock trades at a higher multiple, obviously with no PE ratio by a long shot, significant concerns with long-term viability with cash flow here. I'm very concerned personally with all this debt raising, because who knows when it's going to get better for them. They may have opened all the screens up, but we still have an issue where we have a battle between the streaming services and theaters. So some theaters refusing to even show some companies, and sometimes Disney, it's refusing to show their series in theaters. It's rough out here. We'll see what it looks like. That's all I got for you today.